I'd been interested in investments since I was maybe 7 or 8, but I'd never, and I'd read every book in the Omaha Public Library by the time I was 11.
So why do you think you were interested in investing when you were 7 or 8?
Because I was too dumb to get interested at 4. My dad had a very small investment firm, and I would just go down and I read all the books that he had there, waiting to go to lunch or whatever it might be, and then I went to the public library and read them all, and it just was a fascinating subject to me. But I didn't have any, what everybody thought and all of that at an early age. But I was actually wired in a way that was, this would be something I would be good at.
So wired in what way?
I can't tell you precisely, but I've got the right temperament for it, which is much more important than IQ. If you've got more than 120 points of IQ, sell the rest to somebody else. You don't need it in investments, but you do need the right temperament. You do have to be able to think for yourself. And getting back to earlier question, the first question I ask myself when I look at a business is, is it important and easy what I can determine about this business? Yeah. And a lot of them don't make it. Now, Bill is looking for hard questions that plague society, and where intellect and money may make a difference. They may not for a while, but he's taking on the tough things. My job is to find easy things. I'm looking for 1-foot bars to step over, rather than 8-foot bars to jump over, But that's not irrational if you're looking at the investment universe. But reading is key. On the biography, on the book thing, I will tell you a wonderful book to read. I can tell you a number of them. Intelligent Investor, obviously, if you're in the investment field. But Catherine Graham's autobiography is a marvelous book, and it's absolutely honest, told by an incredible woman who had an incredible life and then wrote honestly about it.
But someone who you knew very well and invested with, and she was a bit reluctant and had to be assured, that
she was afraid of me, actually.
Yes. But what makes that book so much?
It is such a broad range of human experience, honestly told. I mean, you couldn't have, nobody in Hollywood could write a scenario that she lived through, and just to see that world develop, how she reacted to it and everything. You can learn so much. My partner Charlie Munger just loves Ben Franklin. You can learn from other people and their mistakes, and I find biography is my favorite. I'm as excited about tomorrow in terms of what's going to happen as I was when I started. I was having a lot of fun when I started, but I'm having just as much fun now. And when I was here at Columbia, I had this terrible fear. It was impossible for me to speak in public. I mean, I wasn't able to do it. I actually read an ad in the New York Times. I went down to Midtown, signed up for a course, gave the guy a check, and then stopped payment on the check. I mean, I just petrified. But finally, and actually, after you get through hearing me today, maybe you'll wish I'd stayed afraid of public speaking, but that's another question. When I got out to Omaha, I finally decided I just had to do it, so I gave a guy $100 in cash, and once I parted with $100 in cash, I'd jump off the Grand Canyon to get my money's worth. So, but it changed my life. But I would say this: don't fear failure. Almost everything that's turned out, I got turned down by Harvard. The best thing that ever happened. Among others, some good things that happened that didn't seem good at the time. Don't worry about, and don't let it eat at you or look back. Just keep going, because you're going to have some things and forget them. Go forward. I had fun when I was in my 20s, my 30s. Now I'm 86 and I'm having fun. And so I advise students as much as possible, look for the job that you would take if you didn't need a job. I mean, don't sleepwalk through life, and don't say it's all going to be great. I'll do this and I'll do that, and I'm just marking time till I get to be older. As I've told people, that's like saving up sex for your old age. I mean, it just is not you really want to be doing what you love doing, and you can't necessarily find it on your first job.
Right.
But don't give up before you find it. Yeah, we were here in 1800 and conducting this, and somebody would point out that eventually tractors would come along and better fertilizer and everything, and that 80% of the people are now employed on the farm, and in a couple of hundred years it's going to be 2 or 3%. And what are we going to do with all these people? Well, the answer is we release them. Keynes wrote something about it in something called Essays on Persuasion. He wrote in 1930 about what a more prosperous society would become like, and he actually postulated that in 100 years, and we're now 87 years away from that, that there would be 4 to 8 times as much output per capita. And he's remarkable, but he didn't quite get how it might get distributed. But the idea of more output per capita, which is what the progress is made on productivity, that should be harmful to society is crazy. I mean, the distribution may be a problem, but if one person could push a button and turn out everything we turn out now, is that good for the world or bad for the world? You'd have to figure out how to distribute it, but you'd free up all kinds of possibilities for everything else. So everything should be devoted initially to getting greater productivity, but people who fall by the wayside through no fault of their own, as the goose lays more golden eggs, should still get a chance to participate in that prosperity, and that's where government comes in.
Right.
I've spent my life trying to convince people on investing for the long term. And listen, if I knew how to double my money tomorrow, I'd probably invest for the short term too. It's much easier to invest for the long term if you're just talking pure investment, because you know what's going to, in my view, be very high probability what's going to happen 10 and 20 years from now in a major way, and I don't have the faintest idea what's going to happen tomorrow or next week. But if you're talking about societal, it's very tough, because politicians face elections either every 2 years or 6 years, and the way particularly congressional districts have been organized, primaries have become more and more important, and so it's very hard to have politicians think of something that's wonderful for the country for 20 years, but will cost them the election 2 years from now. And that's a basic problem in a democracy, and it gets to be more of a problem as we've arranged congressional districts so the primary dominates, because a very limited number of people turn out, and their motive tend to be on the extremes of both parties. So it's not easy.
Whether you're going to make an investment in a company or whether you're going to buy the company, what are the factors that you're looking for? What test?
I'm looking for durable competitive advantage. I'm looking for something that has a moat around it for a considerable period of time, and I'm looking for an honest and able management to run it, because I don't know how to run it myself. And I'm looking for a purchase price that's not excessive. But it's better to pay a little too much for something that's a very good business than it is to buy some bargain, but really a company without much of a future. And I don't have a ability to predict with a high probability of success the future of most companies. So I'm looking for the exception. But the nice thing is, if there's thousands of companies out there, I really only have to be right on a couple. I mean, it's exactly the opposite of baseball, where you have called strikes, and the pitcher's trying to throw it to you at the worst part of the strike zone for you. And if he succeeds in getting into that corner 3 times and you don't swing, you're out. And investing, it's a no called strike thing. So I can sit there all day and somebody can throw me one company after another, and finally I get one in my sweet spot.